Hello, today we're going to talk about the most recent developments in the financial markets. And we saw that US indices all fell across the board on Friday and snapped their multi week winning streaks. Stock markets in Europe traded lower too. Asia Pacific markets were mostly lower today, with South Korea's Kospi being the only major index that traded higher, climbing 0.5%. And separately, oil prices rose amid fears that supply would be disrupted after the Wagner Group's attempted insurrection in Russia. And being a little bit more extensive on what's going on in Russia, on Saturday we saw that Wagner Group mercenaries took control of Rostov, a southern city in Russia, and marched towards Moscow. Less than 24 hours after that, Wagner leader Yevgeny Prigozhin declared his rebellion over. And US Secretary of State Antony Blinken said that the events revealed that there are cracks in Russia that weren't there before. And as for Prigozhin, many people bet that he is only going to stay alive for a limited time. So we shall see what happens there, but this clearly indicates that chaos in Russia is growing, and we are seeing that Russia is becoming more and more a place that all investors should avoid. Despite all of their oil richness and commodity richness, this does not compensate for the political chaos there. And for the time being, just stay away from Russia. Other bad news, unfortunately, we're seeing that there have been 41 corporate defaults in the US so far this year, the most globally and more than double during the same period last year, according to Moody's Investor Services. Troublingly, Moody's expects that the global default rates would even rise further from where we are right now, and this is going to be a major headache for the markets. And we're also seeing on the Bitcoin space, Bitcoin's price has jumped over the past week and is comfortably hovering around $30,000, which is a long-term barrier. It's highest in 2 months. Market Watcher thinks it's pushed up by news that BlackRock is, of course, planning to launch a spot Bitcoin ETF, but it is also due to the case that large institutional investors are buying Bitcoin as liquidity remains low. And markets may have declined last week, but there's still some support for the markets. And of course, the risks are still rising. There are worries about a banking crisis, narrow rallies and speculative stocks, and the S&P 500 is nearly up 15% for this year, which points to a market on even footing, ready to climb, or we shall say maybe for a trend reversal. This is the major picture that we have right now. And this is also boiling down to the fact that we have seen constant recovery rallies fading, and this is now the next recovery rally that is fading into July, and we are seeing that the winning streaks are also becoming shorter and shorter. So this means for most investors, be prepared to take profits when you see these winning streaks reoccurring constantly and reduce your risk exposure. Because if you look at all the data, there's nothing that really indicates that we're going to come back to a massive phase of recovery. It depends in which asset classes, but still, the broad trend is clearly pointing to weaker markets. If you would like to receive further updates on what's going on in the financial markets, please like and subscribe. Thank you.